Hello traders, today we want to learn the importance of highs and lows, support and resistance line and trend lines, and why we need to connect highs and lows to find the best spot for our trade. The first thing that you must do, as I've talked before in the previous videos if you've seen some, is that you must find the beginning of a trend and mark it for the first time. If you don't know, just you can see that we have an uptrend at the beginning. At the top we have kind of a sideways, and then the market starts going down. So in the middle, somewhere up there, a new trend starts. So you can mark it, like put a line there, just knowing that this is the beginning of a trend. So far this trend has ended because it looks like that we have another uptrend coming, and it started to shape. This is a 1 hour chart, but if you go to the higher time frames, probably this is a kind of a just retrace and a small wave correction. But for this time frame, this is what we see. So we can decide where the market ends to. So we can put a line here to just show that this is the end of the trend. So you just want to show where the highs and lows are first, just to determine where you want to draw lines. So you have a high there, you can come one down there, another one here. So everybody has a different idea. Some people just take the small highs and lows and they count them, but some people just take the big ones. This is actually based on the trader's view. People have different ideas of these highs and lows and trend lines. So that's why you must develop a kind of a sense that what most of the traders think about these trends and support and resistance lines and highs and lows. So when you follow everyone else, you're gonna see how they react to this price action, and probably you're gonna end up where they're going. So you're with the market, you're not going against the trend. That's all I want to say. So over here, as you can see, when we decide about the highs and lows, you can roughly connect them. I'm going to do it later with the proper line, but just to see the flow of the chart. This is like a river. See, it ebbs and flows, it goes up and down, and then suddenly breaks and starts to moving in another direction. In the previous trend, as you can see, we have highs and lows here. You can consider this another high and low, but you can go all the way up there and put your line there. So again, if you follow the flow of the chart, it's like a water going into the river. That's it. And then the trend changes and the market goes another way, and then again changes. So when you know where the market's going, it doesn't matter what system you use, it doesn't matter what indicator you use, what's your strategy, it doesn't matter. When you know where the market's going, you can find the best spot. Any indicator can give you a very good signal. That's why we need to know the basic price action of the chart. Now I'm gonna delete all these, and then we're gonna focus on actually drawing some lines. So I have this indicator here. It lets me to draw some lines. So I connect the highs and lows exactly because I want to draw a trend line, and after that some resistance lines. So market is almost there. Today is Sunday. The market hasn't opened yet. Now we're gonna draw some trend lines first. So this is a downtrend at the moment. You can connect the highs and make a very beautiful trend line. So you can draw one there, and well, you cannot draw this one, you cannot draw that one, so that's probably the only one that you can draw. That's why you have to make a normal trend line. A normal trend line is the one that maybe it's not all at the highs, maybe it's not all at the points, but it connects more highs and lows. But in this downtrend you connect the highs, but in down uptrend, you connect the lows. So you get your line, and then you draw one normal line roughly like that to get the best trend line. Yeah, here we have some like a breakthrough, and then this one is not connected exactly, but that's how we want to see the market. So the market, as you can see, market comes down here, touches the trend line, cannot hit the previous low, and then break through this trend line, and then probably it's gonna back down here on top of this line, and then the market's gonna go up if it goes up. If it breaks this and comes down, then that's another scenario, but that's technically what's gonna happen. You must know these scenarios, and you must go back in chart and test these scenarios maybe 100 times, 200 times, 500 times on one chart, so you learn the movement, the pattern of that currency pair. Just like animals, that every animal moves in a different way, but you can't predict. If you study one animal for a long period of time, you can predict where it's gonna go next time. It's the same thing. Just focus on one pair at the moment. Maybe, I don't know, Euro USD. This is Euro Yen. It doesn't matter which one, but Euro USD probably is the best for the starters. Focus on Euro USD, and then study these patterns and draw these trend lines and connect all the highs and lows. Find the best spots for entry when the market breaks the trend line, when the market breaks the support line or resistance line, and then comes back to it. And then try this for 100 times, 200 times, 500 times. It takes some time, yeah, maybe 2 days, 5 days, maybe 2 weeks, whatever amount of time that you spend on it. But after some time, your eyes gonna see this in the market without even trying hard. It's just like driving. A person who starts driving for the first 2 hours does the same thing as a professional driver who's been driving for 20 years does, right? What's the difference? The level of skill. They do the same thing, but the professional driver, but if you've been driving for some time, you don't think about changing the gear or doing this way and doing that way. You just do it automatically. So why a new driver cannot do it? Because his muscles and mind and this memory muscle connection is not there yet. Same thing here. If you keep doing this exercise for some time, go back to the history of the chart, maybe past year, past 2 years, and find these patterns. Look for them, highs and lows, connect the highs and lows, connect the highs for a downtrend, connect the lows for an uptrend, connect them for a support and resistance line. After some time, you don't need to do this. You just look at the chart and you know where the price is going. So do this exercise for a week or 2 weeks, or maybe a month, whatever amount of time that you need. And then once forever done. When you do it once, you don't need to do it again. You move to the next exercise. Now, I'm gonna draw some support and resistance line. As in the previous videos, we do this by connecting the highs and lows. So the previous trend highs and lows determine the new places that the price is gonna react, because the price is gonna reach to that point, and then all the traders in the world are looking at the same chart. They're gonna react to that. It's just like a bump in the road, that all the drivers gonna react to that bump the same way as everyone else does. So when all the cars break there, you know that there's something there in the road. So when you draw these lines, and the price is gonna, like this one at the top, the price hasn't reached there yet. Maybe it's gonna come back down to this point and then goes up there, or maybe it's gonna come back to the previous one and then goes up there. We don't know. Maybe it breaks through and goes to the previous one. But in any of these scenarios, you can test in the market 200 times and get a percentage. Okay, 70 times it happened, 50 times it didn't happen, 23 times, I don't know, it happened halfway. You have an idea of how accurate this signal is gonna be. That's how you learn that this price movement is good or not. So now I'm gonna draw the actual support and resistance line. So we have one here, one at the top here, one at the bottom there, at the low of the market here, at the top of the market there. You have one more here, another top there, and one at the top of the market. Now, whenever a price breaks a line, it doesn't matter if it's a trend line, it doesn't matter if it's a support and resistance line, you must wait. There isn't a strategy that many traders follow that strategy. When the price breaks a line, they enter the market just right there, and they put a stop under that candle or the couple of candles before. Most of the time, that's why they don't have a very high rate of high win rate. Most of the time, price breaks through and then comes back down and takes their stop, and they lose a lot. This strategy, I don't know if you have a very, very, very good money management, maybe it works. I couldn't get a handle of it. I'm not a fortune teller. I don't know when the market's gonna break and it's gonna go on, or when the market breaks and it's gonna go back down. I don't know that. I couldn't do it properly. What I found out is that whenever a price breaks through a line, I have to wait until it comes back to that line and touches that line or gets close to that area. Then I can take that spot, take it to the lower time frame. As I said before, it's 12 to 20 times lower than the time frame that you are now. Take it to that time frame and find the best spot. The same strategy, you follow it here. You take it there. Again, connect the highs and lows in the lower time frame, draw some lines, and then wait for it break and comes back down. This retracement, this pullback, is a technique that if you follow it in all of your trades, your win rate is gonna be to the roof, maybe above 80%. It's unheard of in the market. You can't see traders having a 90% win rate. It's very rare. So if you do that, your win is gonna be very good, and even if you don't have a very good money management, actually you don't need that much, but if you follow a good money management, like a normal one, you can compensate the losing trades with another trade. Maybe the second trade, you double your, I don't know, if you do martingale, you double your volume, and then you're gonna be good. You compensate for the loss, and then you have a little bit of profit, and then you keep going. You never lose. You just must be patient for the market to come back to that line. I'm gonna zoom in here. See at this last spot. Let me mark it with this. You see this market has broken this line to the top line, and then it stopped there, kind of fluctuating. I'm at the 1 hour time frame, so my lower time frame is not 15 because that's 1/4 only, and it's not 1 minute because that's 1/60th of the time frame. It's somewhere between 15 and 1. This is MetaTrader 4. I have only 5-minute time frame. If you are a MetaTrader 5, you have probably 4 minutes, 3 minutes, 2 minutes as well. 6 minutes. I think you have 6 minutes and 8 minutes too. So 5 minutes is good, 4 minutes is good because that's like 1/15th. 3 minutes is still good because it's 1/20th, but under 3 minutes not good. So I'll go to 5 minutes. As you can see, I'm still here. That's that green area is the one that I put on the higher time frame. You see the market broke through this line around here. Let me grab my pen, I can show you something. See, broke through this, came back down to it, and then moved back up. Went to the higher line, again broke through, came back to the same line, came back to the higher line, and then is fluctuating around this line. Either it's gonna break through or it's gonna go back down. We don't know that yet, but as I said before, if you follow these lines, these highs and lows, this is a lower time frame, just a part of the market. You can see that we have a trend line. So you have one trend line here, you can draw a fan line probably there, and then this is your market. If the market breaks this main trend line down here, or it's gonna go up. I think it's gonna break down, come down, but I'm not a fortune teller. I wait until market happens and then I do my thing. I don't know what's gonna happen, so I don't predict the market. Now, Let me draw properly. So again, at the end of this, this is the last part of the previous trend in the higher time frame. We break it down again. We connect the highs and lows. I know some of you might think it's stupid, but believe me, if you do this for some time, your eyes will adapt to the market. As soon as you see this in the market, you know what's gonna happen. So you connect the lows this time to find the best spot. Maybe there. As you can see, market, the price broke this fan line, touched the main fan line, main trend line, came back up, touched it, and then it's fluctuating there. Now it's under the main trend line. If you can adjust this one a little bit if you want. As you can see, market is under the trend line. Probably it's gonna break down, comes back down at this area. That's what I expect. Either it's gonna go up, opens up with the gap, or comes back down, opens up with the gap, or market just starts normally and comes back down. That's what I expect. But this is the same thing that you're gonna repeat in all the time frame that you have. Now you might say that, okay, how do I choose my higher time frame? In fractal trading, you know, fractals are the same patterns happening in the different dimensions. It doesn't matter how much you zoom in, it doesn't matter how much you zoom out, you see the same pattern. Price chart, the price movement, price action is a fractal. It doesn't matter what time frame you look at it, it's the same thing, same things happening. It's a river. You know these trend lines, highs and lows connecting all of them? The higher time frame was the same thing. So the last leg of the market, the last wave of the market, you take that, you find it where it is. Is it at the resistance? Is it at the support? Is it under the trend line? Is it above the trend line? You find that area, and then you decide, okay, this broke through the trend line, came back down, and then it's gonna go up because it has to go, well, 90% chance that it's gonna go and touch the trend line again. So you know the market is kind of a up, kind of a feeling that's gonna go up. So you go to the lower time frame to find a spot for entry as a buy order because you have a feeling that the market's gonna go up in the higher time frame. We can decide on the exact spots when we go further in the training, but for now you just have to have a kind of a feeling where the price is at the higher time frame and what's gonna do, and then you go to the lower time frame to find the best spot at the same trend that the higher time frame was. So now the higher time frame, go to the 1 hour. As you can see, the market, let me grab my pen. We have a high here, the market came down, broke through. I think it's gonna come down. That's what I expect. So it's a full circle going down, up, down. So when the market is up there, I guess the market is gonna go down. In the lower time frame, as you can see, price broke the trend line. When the market breaks the uptrend trend line, it's gonna go down. What did we have in the higher time frame? It's gonna go down. So we only gonna take sell orders here. We're not gonna buy anything. We're gonna take a sell order. So market's gonna come back down around this area, roughly. Maybe it has a stop here, but generally it's gonna be around this area in between these two lines, somewhere these two. So that was the high that we had before. This is the low. So the market flow through this line, go up, and probably it's gonna go down here. So we expect the market's gonna fall, and we have to take sell trades only. So under this resistance line, which is a support now, but it's gonna breaks, comes back up, you're gonna take a sell trade here and then ride this wave down here. Let me clear everything. So what we're gonna do, Same thing, we're gonna draw some support and resistance lines. We have another one here, one more here. There are too many of them, we don't need all of these. I just wanted to draw everything. So technically we need two, one up, one down. The market's gonna break through this one, come back up at this spot. At this spot you must take a sell trade. When you take a sell trade, the rest of the time that you must just watch until the market goes all the way down to this spot. You don't need it, you can exit at this support line here, because the market's gonna stop anyway at this. This is like a bump in the road. The trader is gonna react to this line. So when the price gets here, you can exit if you have a very good profit. If not, you can bring your stop loss to break even and let the price run, so you make more profit. Maybe it comes back up and then hits your stop loss, but still you haven't lost anything. But in the chance, if there's a chance that the market is going to go down, you make a lot of profit. That's how you analyze multi-time frame in a fractal trading. If you don't master the highs and lows and trend lines and support and resistance line, it doesn't matter what indicator you use. I'm telling you, after years and years and years of losing, it doesn't matter what system you use, it doesn't matter what strategy you use, at the end you will lose. If you don't know price action, systems don't work. But if you know price action properly, every system works, every strategy works. I can change indicators, it doesn't matter. I can change indicator settings, moving averages, 10, 15, 20, 35, 36, whatever number you give moving average, it works, because you find the entry spot in a price action, not with the indicator. Indicator is just for confirmation, just for pinpointing exact point of the entry. But the main thing is the price action. You have to have this area here, so you know that in this area you're gonna take a sell trade, but exactly at what candle or what point, that's the job of the indicator. But roughly you must know what's gonna happen. That's how you make a very high, well, what's the high win rate trade, the high probability trade. This is how you do it. The base is price action. You want to build a building, it doesn't matter is a one-story building in the mountains, or it doesn't matter it's a high-rise building in the middle of a city. You must have foundation. If you put the foundation right, you can build whatever you want. If your building is gonna be higher, bigger, in the case of buildings, you need a deeper foundation. But the price action is just one price action. You want to take a buy or sell, the two things you can do. Either you're gonna buy or you're gonna sell. There's nothing else to do. So you need to learn the price action, the foundation of the market. Spend some time, maybe a week, 2 weeks, 1 month. It's not that much in the period that you're gonna trade for the rest of your life. Spend some time to master these highs and lows and trend lines and support and resistance line. Go back to the history of the chart and check all these. See what happened after the price broke through this trend line. What happened after the price broke through this resistance line? Did the price came back to the resistance line, or no, it didn't? The price, how many times out of like 100, out of 200 times, how many times price actually did come back to the line? How many times it came to this 50% of the line? You must have these percentages, and then you can trust your judgment. Okay, out of 100 times, 78% of the time price came back to this line. 22% it didn't, and 1% it even didn't stop. It just went right through the next turn line. You know, then you have, okay, out of this I have probably about 85% chance, average, that the price gonna come back down. So I wait, I take 85% chance, and I wait. When the price is at this area, then I take it to the lower time frame. That's how you find the best spot. Don't fall for these gurus telling you, oh, use this indicator this way, that way. They never show you the statement of the trades. They don't have that. They're just YouTubers. Don't fall for that. Test yourself. Try these many times until your eyes can see them in the market. If I delete everything, if I come here, I bet you can see these highs and lows in the market. And then if you draw an imaginary trend line, follow these lows, and then you connect them, you can see the market breaks the trend line, the market is kind of fluctuating. You don't need to do all these drawing lines and things. You can draw a support line here, another one there, up there, and then you see where the price is going. You do this 200 times, you're done. Spend 1 week on it, maybe 2 days. I don't know. I think 1 week to 2 weeks is good. And then you move to the next one. That's how you win. That's actually how I learned to win. I hope you enjoyed this episode for the training. I hope if you're a beginner, I'm sure it's gonna help you a lot. Don't waste your time like I did for years and years. Do not trade with your real money at the moment. Open a demo account and practice. I'm sure you're gonna enjoy trading in the next year. Have a good time and bye.